Vatican finance and sovereign banking. You are examining a religious sovereign that also functions as a financial actor with global reach. You will see how land, tithes, and donations evolved into structured capital, how legal status shaped banking choices, and how secrecy and immunity complicate accountability. You should read the history through two lenses: spiritual mandate and fiscal capacity, and you should assess how each lens amplified the other during wars, reforms, and market crises. Footnote. This section sets your frame for evaluating the Holy See as both spiritual authority and financial power over many centuries. Medieval foundations and canon law constraints. You begin in the Middle Ages, when canon law discouraged usury while European commerce demanded credit. You watch church lands generate rents on a continental scale, and you observe how large Florentine houses intermediated papal needs without overtly breaching doctrine. You see how your institution learned to influence lenders through spiritual prestige and property power, while distancing itself from direct money-lending risk. These practices created templates for indirect control of finance that survived long after medieval rules softened. Footnote. This section explains how you navigated anti-usury norms while shaping credit markets through land, rent, and patronage. Renaissance wealth, patronage, and economic leverage. You enter the Renaissance and manage rising flows from tithes, indulgences, and rents. You hire expertise to steward treasure, and you extend and receive credit with ruling houses. You use artistic and civic patronage to entrench legitimacy, yet the same flows let you influence royal policy and urban economies. Your role shifts from passive recipient to active allocator, and with that shift your financial leverage begins to rival your spiritual reach. Footnote. This section shows how you turned steady inflows into strategic alliances that affected cities and crowns. Reformation pressures and the indulgence dispute. You confront a theological rupture triggered in part by fundraising for St. Peter's Basilica. As critiques of indulgences spread, you face a legitimacy shock that links doctrine to finance. You learn that spiritual authority can be weakened when the public reads revenue-raising as commerce and grace. You are forced to adapt the balance between sacred purpose and fiscal method, since credibility becomes a financial asset in its own right. Footnote. This section connects the Reformation to the financial methods you use to support monumental building and administration. Sovereignty after 1929 and institutional architecture. You gain full territorial sovereignty in 1929 and you formalize modern financial arms. You establish entities to manage patrimony and you create an institution widely known as the Vatican Bank, designed to hold and move funds with diplomatic protections. You acquire capabilities common to small sovereigns, including investment management, real estate control, and relationships with major international banks. With sovereignty, you obtain legal independence and operational secrecy that few religious bodies possess. Footnote. This section details how statehood enabled you to build purpose-made financial bodies with global reach. Secrecy, immunity, and accountability risks. You operate under sovereign immunity that places core banking functions outside ordinary national jurisdiction. You benefit from independence when serving worldwide faithful, yet the same shield invites allegations of opacity. You face a recurring question: how you can deliver transparency that satisfies modern standards without surrendering the protections that secure your mission. You must weigh privacy for donors and clergy against safeguards that deter misuse of accounts. Footnote. This section weighs your legal independence against the compliance expectations that follow cross-border banking. War, Reconstruction, and Cold War finance. You traverse an era when assets moved under occupation and Reconstruction altered Europe. You later appear in accounts that describe discrete support for anti-communist movements, including efforts in Eastern Europe. You operate at the junction of faith, diplomacy, and money, where small sums in the right channels can shift civic momentum. You accept that these choices bind your spiritual aims to geopolitical outcomes that carry enduring financial implications. Footnote. This section outlines how you used finance as soft power during conflict and ideological competition. Banco Ambrosiano Lessons on Governance and Risk. You confront a late 20th century scandal tied to an Italian bank with which your institution had deep links. Investigations reported missing funds, opaque guarantees, and overlaps with criminal and clandestine networks. You learned that proximity to commercial banks, even without day-to-day control, can transmit reputational and legal shock. You also learned that letters of comfort, nominee structures, and secrecy can amplify loss when oversight is weak. Footnote. This section extracts governance lessons from a major collapse that exposed the costs of opacity and informal support. Assets, reforms, and contemporary oversight. You hold diversified assets that include European and American real estate, financial investments, and collections of cultural value. You have enacted reform waves to strengthen compliance and supervision, yet periodic investigations into suspicious flows remind you that change is a process rather than a press release. You now operate amid global standards for due diligence and reporting, and you must align sacred stewardship with those standards to protect credibility. Footnote. This section notes that you pursued reforms while managing large and varied assets under modern compliance rules. Why the Vatican remains a distinct financial actor. You are not a conventional bank and not a typical state. You combine pastoral reach, diplomatic status, and centuries of property rights into a single platform. You command loyalty that is spiritual and you navigate markets that are secular, which lets you act where others cannot. You remain influential because you marry permanence with prudence, using ceremony to legitimize continuity while you deploy capital across cycles. Footnote. This section explains why your blend of religion and sovereignty creates uncommon financial resilience. Conclusion and research agenda. You should study this subject as legal history and as financial regulation. You need better public records on governance, clearer boundaries between sacred and commercial risk, and independent audits that respect sovereignty while preventing abuse. You will understand the modern system only when you can trace how faith-based legitimacy, sovereign shields, and market instruments interact to project power well beyond Rome. Footnote. This section calls you to pair archival work with regulatory analysis so future debates rest on evidence rather than mystique.